Hey everybody, Boris speaking Forex. Welcome to the weekly technicals for the crosses for April 15th to April 19, 2019. And the crosses situation this week is actually kind of very interesting because, of course, of the yen breakout. The cleanest, clearest, most obvious trade is the Aussie yen to the upside. I mean, that trade very much now looks to be 82 to the upside. We cleared that 80 support, and there's just free range area over there. Now, of course, it's fraught with problems if the Australian data goes south. But if the Australian data is supportive, it seems very, very reasonable that we could have a chance here for a run towards the 82s on the Aussie yen. That's by far the cleanest, clearest run out there on the yen crosses. Euro yen, on the other hand, is kind of very interesting because it also looks quite good on the charts, but at the same time, it's literally at resistance. And in some ways, if you are trading against momentum, if you take the perverse point of view, if you take the opposite point of view, it's a very low risk trade here because you literally have no more than a 75-point stop, against which the potential here to the downside is quite significant. So while yes, it looks extended, we'll take a look at the charts, I think the possibility here of it running into resistance is relatively strong. And then finally, the trade from last week, that I haven't done this a lot, but I think it's worthwhile sometimes to follow up, especially since we didn't have a lot of movement. We talked about the idea that Aussie Kiwi is hitting that resistance at the 106.50, but we really wanted to see some evidence of topping. I think we're starting to see just a little bit of it this week. The rebalancing between the Aussie and the Kiwi is starting to take place here. Of course, if we get a bad employment data number, it's going to be a very, very easy trade to the downside. But even before that, I think there's some potential here for further rebalancing. Let's take a look at the euro yen first, and here's what I'm talking about in terms of the euro yen. So looks very bullish. You know, we pulled away from the 20 SMA. We certainly made a nice bottoming here over a long period of time here. We're starting to pull away to the upside, but this has been the stall area for the prior time in March. And the critical question is, can it get past the stall here at around the 127? A couple of days of no further upside movement will only embolden the bears to come back and take it towards the 125 SMA. However, if we continue that, if the breakout that we saw on Friday continues through these levels, then it becomes a completely different ballgame and opens up the 127.50, 128 area to the upside. It really turns it into a much more powerful rally. And extends it really towards the much longer term 129 500 SMA. That having been said, though, the truly clean breakout this week was the Aussie yen. You can see that very well on the charts here because we cleared all of this resist now. This is a big upside candle, and generally that's a very meaningful signal. At least until Wednesday's employment data, I think you have to trade this to the long side. I don't know how much, I don't know how long it's going to, but I have a relatively high degree of confidence that it will extend here, perhaps maybe another 50 pips before the rally kind of exhausts itself. So this right now seems to be certainly a strong buy signal with the low of this candle now, the 79.50, as your terminal stop. If we come back and we break the lows of this candle, this whole breakout is completely negated. If you want to be more conservative, you can give yourself the SMA as a stop level. But I think really, if the low of the candle is taken out, the whole positive breakout structure is completely negated. But just from a cleanly momentum, purely breakout point of view, this is a strong signal, and it's a signal that has a definitely a chance for extension. You can see several analogs here where we have strong signals. That is, we take out 4 or 5 prior days of highs. Like here's a strong signal, the continuation here. Here's a strong signal, continuation here. Here's a strong signal, sort of very, very, not similar, but mildly similar construct here. A couple of days of consolidation and extension. Most importantly, what you see in every one of these prior analog cases is price never, ever, ever gets below the lows of the breakout candle. So as long as you stay within those parameters, the trade to the long side should be yours. And then finally, let's take a look at the Aussie Kiwi. So here's Aussie Kiwi. Remember last week I was like, we're really, we're overextended. This seems to be just simply a purely mean to reversion trade, reversion to the mean trade, back to the to the moving average. This 106.50 is a big resist area, and we are stalling. And we did finally see a little bit of rebalancing between the Aussie and the Kiwi. And today's flame out candle certainly gives you a relatively decent chance to take a short. If you're watching your risk, the risk here is relatively small against this high. So the high here is 106.25. I'd put my high at 106.50 just to give myself a little bit of breathing room. But I think if you put yourself at 106.50, you should be. If you really want to give yourself more room, you put it at 106.75. That would clear all the resist over here. But I don't know if you really need to have that much of a risk in the trade. So it's a tight risk, and see if you can get further move to the downside, at least before the Wednesday data. If the Wednesday data is negative, for sure, that's going to come back towards the moving average, towards the 106s, towards the 105s over the next couple of days. So that's how the cross trades set up. Let's see if this week gives us a better resolution than last week did. Wish you guys the best luck, the best trading. Boris Lonsberg, over now.